49.6, so beating expectations there. That was compared to a reading of a 49.2 in October. So certainly an improvement, and that has been really put down to production picking up off the back of that Golden Week holiday that they celebrated in October, which typically is a shorter month, but also as this energy shortage has been easing across the country, as China has really been ramping up the production of coal to try to cool some of those prices. And so the market certainly likes what it sees and is hearing about that, certainly improving on the manufacturing side of things, because we are seeing both the major indices up around 0.4% right now. That CSI 300 index also sitting up around 0.3%. So making up for some of that lost ground we certainly saw yesterday. And I mean, if you look at those thermal coal futures as well, I mean, we were trading up around almost 2,000 yuan per tonne in the middle of October. We are looking at 821 yuan per tonne at the moment. So certainly that comes despite these manufacturers also facing these supply chain bottlenecks and these higher raw material costs. We do know that they still persist, and we do know that those inflationary pressures do still exist. So still some headwinds, but certainly an improvement for now when it comes to the manufacturing side of things. Christine, back to you.
All right, Sam, thank you so much for that. Sam Varda's there. Let's check in on U.S. Treasuries tonight now and see how it is stacking up. Let's flip the boards. Right now, the yield's pointing lower. The 10-year yield is the one to watch, 1.5175. It took a plunge on Friday because of those COVID Omicron variant fears. 2-year sitting around 0.507. Investors also waiting for November's non-farm payrolls report this Friday for more clues on the Fed's path to tightening policy. But ahead of that, we'll hear from Fed Chair Jay Powell and U.S. Treasury Secretary Janet Yellen. Both are set to testify about the state of the U.S. economy before Congress later today. Gregory Peters is the co-CEO at PGIM Fixed Income, joining us from Newark, New Jersey. Thank you so much for joining us. We have President Biden saying, you know, there's no need to panic. There's no strict lockdown. We're not going to go back to that. It sounds like the market's also bouncing back a bit. It sounds like the markets are pretty confident there's a playbook to go back to when it comes to tackling this new variant.
Yeah, so the markets are confident, but what they're not confident in is the Fed itself. So I think if you go back a few days before the news on Friday, or the market reacted on Friday, the fixed income market was pricing in a very aggressive path of the Fed. So a lot more tightening. There was all this talk about increasing or shortening the time frame of taper. And the fixed income market was reacting quite negatively to that. Well, that all unwound on Friday, as I think really the response was, okay, let's take a step back here. Perhaps this aggressive Fed move isn't in the cards, and this was the catalyst behind it.
Do you think when we hear Powell speak later today, how is he going to phrase his policy-making strategy, given what we know about the new variant?
Yeah, so he already released a speech. That's the good news, and so what he said was really quite reasonable. That the path of this virus is something that has to be factored in. They do have some concerns, or they're evaluating closely the tightness of the labor market. They're evaluating inflation. They understand that inflation is a problem for many people in this country. But at the same time, they have to be respectful of the path of the virus. So I think it will be a balancing act. I think it'll be quite reasonable.
At the same time, he's saying that inflation is still a lingering concern. At what point do you think the Fed will start to change its course when it comes to tapering?
I don't know. The real surprise in the market, I think, over the past several months is how quickly the Fed has abandoned this flexible average inflation targeting belief. And so they pulled forth rate hikes. They talk about shortening the taper. So I think that's already in the marketplace. And I think that is something that really unhinged the bond market to a large degree. So I almost feel that's already been done, and we're almost past that. And I expect maybe a little more voice of reason coming through the Fed and the members of the Fed going forward. So we shall see, but they are a slave to these external and existential shocks.
Data will actually show for itself because we had the Friday payroll report. The Fed's going to be watching that very closely as well. How is that likely? What kind of number is the bond market likely to look for?
I actually don't think the number matters that much, to be brutally frank. First of all, the dispersion of that number is extremely wide. It's just emblematic of the fact that economists have really very little vision to the future. They don't really have a great handle on what the labor market looks like. So I don't think it's a market moving event per se. As I think what's more important is the rhetoric coming out of the Fed here, talking about the flexibility given the virus concerns. I think that matters much more than what the labor market print will be on Friday.
The debt ceiling is something you're watching very closely. That debt ceiling is estimated to be between December 5th and early February. Likely to fix the debt ceiling, the short order is the deadline for lifting or suspending that is something that at issue. What are you expecting to see, and how is that going to be something that you factor into your strategy?
Well, talk about a self-inflicted wound. I mean, this is something that the market doesn't need right now. There's enough uncertainty as it is already. This is something that I do think markets believe will be rectified. However, it will likely go down to the wire. It's just one of these uncertain events that we just don't need right now. So I do think it does get worked out, but this has been used as a political tool, unfortunately, and the markets and the Treasury itself has been held hostage to these political demands.
So if one had to invest in the bond market, fixed income, where would you advise investors to do?
Yeah, so I actually still see value in U.S. rates out the back end of the curve. We think the path for interest rates are lower in the U.S., not higher. That's one area that we would invest in. And so we see value across the curve. The 20-year in particular looks very attractive to us. And then credit. Credit has really underperformed equities here, and I think for good reason. But I see a lot more value in the credit market relative to equities going forward. I think it's going to be what we call a roll and carry type of environment where you just earn your coupon, maybe with a little kiss. But I think in an environment where there's a lot more uncertainty, maybe a lot more equity volatility, credit should assert itself. So we still see value across the credit markets. And then the real question on the table is the emerging market space, which I think is too early, but it has definitely lagged here. And my strong suspicion is in 2022, that is going to be a real place to invest.
Gregory, thank you so much for your time. Great talking to you. Gregory Peters from PGIM Fixed Income. Coming up next, the Omicron variant sparking border closures and tighter restrictions across the globe. Just how worried should we be? We'll ask an infectious disease expert from Boston University after this quick break.
Hey guys, I just saw some offer around 114 on dollar yen, and we have bid around 113. So keep your eye on dollar yen from Asian Central Bank. So you can see 114, they defend 114 from yesterday. And also they defend 113, and so I guess this is going to be the range today for dollar yen. Now the best trade I'm looking for in Asia right now, you can take OCN short. No, OCN, let me see OCN. OC strong, so OC yen will be long. We're looking for long because it's strong. So I'm looking for any pullback. I will buy OCN. Also year bound OC, I'm looking to short. because pound is in red and the Aussie is strong. So I'm looking to short any rally. I'm looking to short pound the Aussie and also euro Aussie sell. So this two pair sell and this pair is buy. So this is the three pair. I will be focused on Asia. Take a strong currency against the weak currency. So this is the best three trades so far will be in Asia.
Welcome back. We're back with more COVID-19 updates. Australia has delayed the reopening of its borders to foreign workers and students by another 2 weeks to December 15th. That's to buy more time to assess the impact of the Omicron variant. The government had initially planned to allow eligible vaccinated travellers to enter Australia starting tomorrow. But now they'll need to wait a couple more weeks as local authorities gather information to better understand the new COVID mutation. On the other hand, Japan, Morocco and Israel taking more drastic steps by closing their borders altogether. The U.S., meanwhile, banning travelers from 8 South African nations. But the Biden administration did reassure Americans that there's no lockdown for now. NBC's Gabby Gutierrez has the details.
With the new COVID variant Omicron spreading around the world, President Biden says he's not considering any widespread U.S. lockdown.
This variant is a cause for concern, not a cause for panic.
The president, after huddling with public health advisors over the weekend, now says the White House is working with vaccine manufacturers to develop vaccines or boosters against Omicron if needed.
The best protection against this new variant or any of the variants out there, the ones we've been dealing with already, is getting fully vaccinated and getting a booster shot.
The CDC is stressing that people 18 and older should get a booster. It comes as the Biden administration's new travel restrictions for 8 South African countries take effect. They bar foreign visitors to the U.S., but not American citizens trying to get home. Other countries such as Israel, Morocco, and Japan are launching even more drastic steps, banning all travelers as a growing list of countries confirm Omicron cases, including Canada. New York City reinstituted its indoor mask advisory, regardless of vaccination status.
We have notification that it has arrived in Ontario, which is literally across the bridge from where I live. I can see Canada from my house.
But with stranded passengers at Johannesburg's airport, South Africa's president says the global travel restrictions are an overreaction. Some doctors there saying the variant's symptoms are mild.
Are our hospitals overwhelmed? No.
But there are mounting questions about Omicron's transmissibility, resistance to vaccines, and severity of symptoms. Here's what we know so far. Based on very limited evidence from South Africa, this new strain appears to be highly contagious. Here's what we don't know: whether the variant is more deadly than previous ones, and whether our existing vaccines work as well against it. All 3 manufacturers in the U.S. are testing them right now.
It's highly likely that there will be loss of vaccine efficacy and effectiveness, but whether we will really have to tweak the current vaccines, we just don't know. We have to wait, I think, for a couple of weeks until we get those key data.
Moderna's chief medical officer says an Omicron-specific vaccine could take months to manufacture.
Should Americans start getting used to the idea that they may need a COVID vaccine or COVID booster perhaps every year, much like the flu shot?
I think so, Gabe. These beta coronaviruses, we see this, they become endemic. They just remain in societies.
The White House says the U.S. is sequencing nearly 80,000 samples per week, more than any other country. So it's only a matter of time.
To talk more about the virus, Dr. Nahid Badalia is the founding director at Boston University Center for Emerging Infectious Diseases, Policy and Research, as well as the associate director of the National Emerging Infectious Diseases Laboratories at Boston University, joining us from Boston. Dr. Badalia, thank you so much for being with us. We don't quite know enough about this virus yet, so time is of the essence, but in the meantime, is the only way to fight transmission and infection closing down travel borders, testing, quarantines? Is that the way to tackle this new variant?
Yeah, Christine, I think that travel bans, as we're starting to find out, because more and more countries are now discovering cases within their borders, and in some cases with local transmission, travel bans have limited utility, particularly when, the bullet is already out of the gun. You already have a lot of sort of cases around the world. I think that testing and requiring vaccines for travel and potentially requiring some level of quarantine after somebody travels might be one way to slow it. I have to say that the best way that we can do this is keep our vigilance up with non-pharmaceutical interventions like masking. And as you've heard, I'm sure many times over this weekend, is vaccination. We need to ensure, as you've heard from the vaccine manufacturers, that you may see sort of decrease in, if the worst case scenario comes up, you may see a decrease in efficacy, but our current vaccines, as well as the boosters, may still provide protection.
Okay, so some protection is better than nothing. How quickly do you think pharmaceutical companies can tweak their current vaccine lineup to fight this new variant?
So what's going on right now, the testing that they're talking about is something we call neutralization studies, where they're looking to see if the virus can actually, the antibodies that are in blood for people who have been vaccinated can actually control this virus or not. And if they find out that the activity against this virus is much reduced, what Moderna has said is about 60 days to get a new candidate. Pfizer has said about 100 days. Johnson & Johnson said they're starting to look at this. So you're talking about a matter of months to first get a candidate that could go into clinical trials or into clinical sort of practice. And then you have to have manufacturing, which is going to be another couple of months. You're looking at 5 or 6 months, which is another reason why if you can't wait, you have to get vaccinated today with the vaccines that are available.
Vaccination is one thing, but there seems to be so much vaccine inequality, and that's the reason why South Africa is in a position it's in. What are we doing? Do you think developed countries are doing enough to get the vaccine out to the much needed developing world to try to immunize the population as well?
I think, Christine, the inequality is just, it's a human rights issue. It's immensely, unfair, because what you're seeing is in most of the world is that 50% of the world is one dose. But when you actually look at low-income countries, less than 7% of the population has gotten one dose. And the continent of Africa, in fact, South Africa is much better off than many of the other countries in Africa. South Africa is about 30% fully vaccinated. The rest of the continent is about 7%. And what you've seen is that even efforts like COVAX from WHO, the reason that they've sort of fallen behind is because rich countries are getting ahead in the line and buying up the doses as manufacturers are producing them. And so donating is one thing, which I'm glad some countries are doing, although the doses haven't gotten to the countries that they should be getting to. But the other thing we need to do is actually improve the manufacturing capacity in more parts of the world, not just to combat this pandemic, but also the future one. Because, Christine, if we need boosters more regularly, are we going to keep having this growing inequality get worse over time, if you will?
So how do we actually live with COVID at an endemic level? Because it sounds like we all have to get booster shots almost every other year. Is that going to be the norm from now onwards?
We actually don't know that yet. I mean, as long as there is global transmission, this virus is going to continue to evolve, and there's going to be a risk that we might get variants, which then need us to update our vaccines. And the way that we get to live with viruses is when they don't cause such havoc that they overturn our healthcare systems, right? I mean, this is what you're seeing in many parts of the world that are not as heavily vaccinated, or even parts of the United States that are not that heavily vaccinated. We need to get to a point where we can at least get enough doses in people so you create this at least some level of protection. And what we know is that many of these vaccines, even if their protection against infections may go down, there's protection against severe disease. Eventually, I think you may get to a point where there's enough immunity. The reason this virus was so dangerous to all of us is none of us had any immunity. And down the road, I think this may be something like a flu, where you see it may cause some deaths, but it's not overwhelming healthcare systems. And that's the point we're trying to get to.
Down the road, do you think we'll ever wipe out COVID altogether? Is there a limit as to how much the virus can evolve?
So I don't think there in the near future we have a hope of eliminating, which is basically, making sure there's no virus in a particular area. I certainly don't think we'll eradicate it, which means that we will make it disappear altogether from the face of the earth, just given how much transmission there is. beta coronaviruses in general tend to have, evolution. And this, even though if the Omicron variant doesn't end up being our worst case scenario, it's a proof of principle, right? The more this virus continues to transmit at high uncontrolled levels, the more likely it is that it will continue to be a threat in the future to all of us.
We need to have a strict word with Mother Nature. That's all I can say. Dr. Badalia, thank you so much for being with us today and sharing your insights. Great talking to you. Dr. Nahid Badalia from Boston University. Coming up next, we'll get an update on the big movers in Hong Kong, and we head into a break. Let's take a look at some of the winners and the losers out of South Korea. All trading to the upside, as you can see. Street Signs will be back after this quick break.
Okay, guys, so if you miss the short on bound Aussie, wait for rally, because right now you don't want to short at the bottom. The same thing for Euro Aussie. You wait for rallies and you short. You don't want to miss at the bottom. Okay. Now I'm looking also for US market Nasdaq. Yesterday we said we're gonna keep our eye on those three lines. If we're trading above, this means the market is going to this target. Now it's a big chance now we start coming down. If we break this line, it's big chance we're gonna go straight to this line. So you keep your eye. So maybe this is a good idea to short right here, and you put stop loss above it. And it's very low risk trade. And if we get here also, we can short and we put stop loss above it. So this is if you looking to do something in US market. I don't see anything else here. CAD yen long also, so we need to put CAD yen. CAD GBY. So we're looking to buy CAD yen. Any pullback you buy.
The Hong Kong market.
So basically, we will focus on Asia, CAD yen, Aussie yen long, bound Aussie, Euro Aussie short, and Nasdaq 100 short. Okay.
1%, and we got this Hang Seng Tech Index of 0.8%. We got Omicron fueling worries about the outlook for the border reopening with the mainland. It's been shut now for the last 21 months. This comes as Hong Kong now has 3 reported cases of Omicron. They've all been imported and contained and currently isolated in hospital. All countries with reported infections of the new variant will be moved to the highest risk tier for entry, and that includes 14 territories. And what that means is upon arrival into Hong Kong, they will be subject to 21 days in mandatory quarantine. Looking at our heavyweight stocks, that we are seeing red across the board with particular weakness across the tech stocks. Tencent shares down 1.7%. Baba is traded down 2%, and Meituan, after sinking 7% yesterday after its worse than expected Q3 numbers, it was a loss. We're down 3.3% as we speak. I want to show you what's happening with some of the gambling stocks. This was following the arrest of Sun City chairman. This is the biggest junket over in Macau. Gambling stocks yesterday taking a nosedive, down 7%. A little bit of a comeback today. We got Galaxy Entertainment shares up 0.25%. If we can flip the board and look at the rest of the 3, there were claims of alleged cross-border gambling and money laundering. So with that, we've got shares of Sun City coming back online today. They were suspended yesterday from trade, and some steep falls today in resumed trade. Sun City, this is the chairman that was arrested. His stock down almost 35%. Sun Entertainment Group shares are sitting flat, and there's another stock called Summit Ascent. That stock is down 41%, also linked with Sun City. So these are all concerns to do with the arrest. And of course, this comes as the gaming law is under review and is expected to be updated sometime soon, with the concessions due for renewal by the middle of next year. We're also looking at L'Occitane shares on the back of the company's interim profits, which jumped threefold, $67 million on sales, which jumped 13% on year. Omicron is a concern, they say, but they expect limited impact given the strong sales they're seeing via online. L'Occitane is another outperformer today, higher by 0.8%. This is a French cosmetics retailer. We're going for a short break here on Street Signs, but we'll ask the Forex space and check in on the next guest for his currency bets as Omicron worries ease. Street Signs will be back in 2 minutes.
So this month we did about 16,994 on gold trade. Yesterday we did $900.79. The day before 534. The day before 870. And we draw the money every single day. Whatever profit we make, we draw it to my account. Like I said, we try to pay monthly bill from this account. So we try to make 15,000 every month. So for last 3 months, you can see we did 46,000. So this 52,000. Now this month we did the 16,000. We hit our target for this month. Same thing for Forex. We did about 24,000, which it was good month so far. So we're looking to do this also on December. All right. So you know now we are looking for 4 trade. Canadian OCN long, Pound OC Euro OC short, and Nasdaq 100 short. That's it for today on Asian session. I'll be in the chat room if you guys have any question. I'll post my live.
Welcome back to Street Signs, and here are the stories we're watching this Tuesday. Chinese yuan strengthening as November manufacturing PMI beats forecast, posting its first growth in 3 months. Oil prices climb as Omicron worries ease. Traders also betting that OPEC Plus producers will hold off their output hike as they wait for more clarity on the new COVID variant. Plus, shares of Australia's AMP see their best day in 3 weeks as investors cheer the company's plan to slash costs further under its demerger strategy. And we've got some comments from Australia's Prime Minister Scott Morrison about the COVID situation and travel restrictions in the country. Will Couliris joins us now with the latest details. Will?
Good morning again, Chrissy. Yeah, it's been a rather eventful week, but also an eventful last 30 minutes or so here in Australia when it does come to the COVID situation, because not only did we hear from the Prime Minister, but we also got alerted to the fact that there are a range of exposure areas when it does come to this Omicron variant here in New South Wales, particularly because of the one traveller who, in a sense, slipped through the net, had Omicron, took a private car to the Central Coast, visited some venues there, but then there was within that alert, a number of other casual contact exposure sites that basically do list some of the biggest malls, not only here in New South Wales, but also in Australia. One in particular, Westfield Parramatta, is absolutely massive. So that could potentially be a cause for concern moving forward, but it is incredibly early to have that determination. But it is not unlike what we did see here in New South Wales when we did have the Delta outbreak back earlier on this year. But the Prime Minister also still remaining hopeful when it does come to this reopening strategy that Australia is adopting in the face of any kind of fears when it does come to Omicron. And here's what he had to say just a little bit earlier down in Canberra. Listen in.
We are just delaying, postponing temporarily for 2 weeks. And indeed, if the information allows us to bring that forward again, great, tremendous. Because in Australia, we're moving forward. We're not going back when it comes to this virus. We are going to keep moving forward into Christmas and into 2022, and we're going to open safely and we're going to stay safely open.
And the delay that he was talking about there is that decision that was taken late last night following on from the National Security Cabinet meeting to delay the reopening of the borders for the over 200,000 visa holders who were seeking to come to Australia. This is skilled workers. This is people who are international students. This is people who are coming on humanitarian visas. This is people that are working in agriculture. So all of that is going to be delayed until December the 15th. At the same time, we were supposed to also tomorrow be welcoming our friends from Japan and South Korea via anyone who is fully vaccinated. So a vaccinated travel lane was going to be into effect. That has also been delayed for a further 2 weeks. But all of this does come with, I suppose, the preamble from the Prime Minister that if things do improve, if we see via the data that it isn't necessarily something to be worrying about, then that could be brought forward. But at the same time, Christine, this is obviously a rapidly moving situation. So it's basically anything goes until we do get some clarification about the situation on the ground.
It's like sitting in a fast car, isn't it? I mean, you just don't know where it's going to go next, left or right or go straight, So it's one of those things where we have to constantly watch where we're heading. Thank you so much, Will. Will Kalouris there. Plenty more coming up in the next hour of Street Science. Stick around. We're back in a couple of minutes.